Conservatives are asking Mark Carney to publicly release information on all of his multi-million-dollar stock options.
Prime Minister Mark Carney has claimed that he canceled the carbon tax, but in reality, the federal carbon pricing law remains in effect.
Canada, the United States, and Mexico are all facing negative economic consequences due to US President Donald Trump's tariffs, while China is benefiting. Hello Canada, it's Wednesday, March 19th, and this is the True North Daily Brief. I'm Cosmin, Dzsurdzsa.
And I'm Clayton, DeMaine.
We've got you covered with all the news you need to know. Let's discuss the top stories of the day and the True North exclusives you won't hear anywhere else. Conservatives are demanding transparency from Prime Minister Mark Carney as questions swirl over his potential multi-million-dollar stock options from his time at Brookfield Asset Management. Opposition ethics critic Michael Barrett renewed calls on Tuesday for Carney to disclose his assets, claiming that the newly sworn-in PM is likely raking in millions from his former asset firm. Barrett said these assets could place Carney in a conflict of interest as he implements federal policy. As first reported by Bloomberg, Carney held $6.8 million in Brookfield stock options before quitting the company to run in the Liberal leadership race. However, the company's annual filings do not indicate how much of that money has been paid out to him. Barrett noted that he is likely still owed money for these stock options and that his dealings as Prime Minister could influence the value of those assets, potentially remaining hidden before the end of the next general election. Additionally, Brookfield has invested billions into green energy projects and infrastructure, something Carney's policies, including carbon taxes and negotiations with foreign countries, are likely to influence. During a press conference in the UK on Monday, Carney lashed out after reporters grilled him on his potential conflicts of interest. He interrupted one reporter saying, quote, "What possible conflict would I have?" and outright denied that he had any conflicts of interest. Carney also rejected requests for him to disclose what assets went into his blind trust, accusing reporters of, quote, trying to invent new rules that would have him disclose those assets before the 120-day requirement he has to do so. So, Clayton, what laws are on the books in Canada when it comes to financial disclosure for elected officials? And are they different from the United States, where I know politicians are required to disclose the exact value of all their assets?
Yeah, they are different. So the US, you have to disclose a range of assets, while Canadian politicians are required to disclose their assets, liabilities, income sources, and certain financial activities, but they don't have to disclose the exact dollar value as their American counterparts, as you said. They do have to include those numbers, however, to the Conflict of Interest and Ethics Commissioner, who then advises the elected official on what needs to be divested from and disclosed to the public. The commissioner publishes a summary of the confidential disclosure statement detailing those assets and liabilities, but they won't include the amount the official has invested. They also have to disclose the financial interests of their spouses and dependent children, but again, the value of those interests aren't revealed to the public, and only the ethics commissioner sees that. In the US, they have to disclose any transactions that are greater than $1,000, and a blind trust is recommended but not always required for those key positions, like in Canada. But even knowing what Carney is invested in, let alone the value of those investments, could shed a light onto any potential conflicts of interest he has while dealing with other nations or setting public policy. If he remains invested in ESG or environmental social governance evaluation companies, for example, as he's worked in before, and then changes or enhances policies requiring companies to use those assessment organization services, that would be a glaringly obvious conflict of interest. Prime Minister Mark Carney's claim to cancel the consumer portion of the carbon tax is misleading, as a federal carbon pricing scheme law requires on the books. Carney's announcement on Friday was based on an order in council to lower the cost of the consumer portion of the tax to zero. In reality, the federal carbon tax, legally known as the Greenhouse Gas Pollution Pricing Act, remains in effect across Canada and can only be axed by a majority vote in Parliament. Since this isn't a repeal of the law currently in place, there is nothing that could stop the tax from being imposed again at will or even further increased. Carney announced an end to the consumer carbon price during a signing ceremony at his inaugural cabinet meeting Friday, which was attended by members of the press. It was an unusual display for Canadian politics and more akin to US President Donald Trump's regular public signings of executive orders from the Oval Office. Canadian prime ministers do not wield the same unilateral executive powers as US presidents. Carney posted the order in council to X on Saturday, which said it set all, quote, applicable fuel charge rates for all types of fuel and combustible waste to zero after March 31st, 2025. Conservatives responded by cautioning Canadians that this does not amount to repealing its legislation, as Parliament would have to first reconvene before it could be voted on. The Conservatives claim that this was done by design to allow the Liberals to later reignite the contentious carbon tax once it becomes more politically convenient to do so. This order also provides the Carney government with the ability to further raise it, with the Liberals' latest increase previously being scheduled for April 1st, before the document was signed. So Cosmin, he's lowered the carbon price to zero for consumers. Are there any other federal climate policies that remain in place which are negatively contributing to the cost of living crisis?
Yeah, but just to touch more on the carbon pricing law itself, what he did was lower the flat rate that Canadian consumers were facing. And I think it's $80 per ton, and they intended it to go up to like $170 eventually. But he lowered that portion to zero. But the output-based pricing system in that law, which is what industry emitters have to pay, that remains in effect. And of course, these things have ripple effects on the cost of gas, home heating, and even groceries. Anything that's transported with a truck or something that requires fossil fuels. But there are other regulations too that still remain. So there's the clean fuel regulations. Trudeau has introduced the electric vehicle mandates. There's also the oil and gas emission cap, which is currently in the works. And he's also introduced the net zero electricity regulations. And all of these things contribute to raising costs for average people. They make it harder to power your home and more expensive. And Canadians need to realize that all of these laws are still on the books or they're on their way. The escalating tariff war between the United States and its trading partners is hitting North America the hardest, with Canada, Mexico, and the US seeing slowed economic growth. Meanwhile, China stands to benefit from a boost to GDP and lower inflation, according to recent data. The Organization for Economic Cooperation and Development's latest interim economic outlook, released on Monday, revised its projections for North America. U.S. economic growth is expected to slow from 2.2% in 2025 to 1.6% in 2026. Canada's economy is forecast to grow just 0.7% in both years. Mexico is expected to contract by 1.3% in 2025 and 0.6% in 2026. Canada's inflation rate is projected to be 3.1% in 2025, placing it between Mexico and the United States and in the middle of the pack of OECD countries. China will see the lowest inflation rate at 0.6% and 1.4% in 2025 and 2026, respectively. Meanwhile, China's real GDP is projected to grow 4.8% in 2025 before slowing to 4.4% in 2026. The OECD report highlighted that the proliferation of tariffs would hurt global business investment and drive inflation higher, forcing central banks to maintain elevated interest rates longer than previously anticipated. The organization warned that an additional 10 percentage point rise in bilateral tariffs could cut global GDP by 0.3% within 3 years and drive inflation up by 0.4 percentage points annually. The OECD warned that this could worsen amid an escalated trade war. In retaliation to new U.S. tariffs on Canadian steel and aluminum, the Liberal government imposed 25% tariffs on an additional $29.8 billion worth of U.S. imports, bringing the total amount of counter tariffs to nearly $60 billion. So, Clayton, what has the Bank of Canada said about the tariffs and their impact on the Canadian economy?
Well, unsurprisingly, much like the OECD, the Bank of Canada is warning that this tariff spat is already negatively affecting Canada and is expected to do so if the tariff spat continues. The Bank of Canada also warned that the tariff war is expected to increase inflation in Canada. For months, Canada's inflation rate has been floating around the 2% target that the bank has set out, but it warned that inflation is expected to climb to 2.5% in March. It said a protracted tariff war will lead to poor GDP growth and inflation, and warned that the conflict will likely slow first quarter GDP growth and disrupt the recovery of Canada's job markets. The uncertainty that comes with on and off tariffs have already pushed up short-term inflation expectations, and the Canadian dollar still sits at a value of under 70 cents US, which is how low it was when the lockdowns were first announced in 2020, making it $1.44 per American dollar. The bank also cut policy rates to 2.75% in the face of tariffs last week. The Bank of Canada governor said that the bank's rate changes are part of a continuous focus on attempting to maintain price stability in Canada. And he said that at the end of 2024, Canada was on a solid economic footing, but that the tariffs pose a crisis for the Canadian economy and have already harmed business investment and consumer confidence.
That's it for today, folks. Thanks for tuning in. You can stay on top of new episodes every weekday by subscribing to the Daily Brief on iTunes and Spotify. Also, while you're at it, make sure to hit us with a 5-star rating and please leave a review.